We see the situation in Russia somewhat deteriorating. We see that we are now in a very low oil price environment, which by all accounts it seems is going to be sustained. So that creates a situation whereby across Scandinavia we have all these kind of risks, and what we're talking about opportunities. Yes, opportunities in the sense that assets might not be sought after, and hence we might be looking at buying assets there vis-a-vis all these issues. But are we really talking about good opportunities on a risk-adjusted return basis, bearing in mind all this risk? Put it differently, would I, as a foreign investor, be better off looking in Spain these days, whereby things have improved dramatically compared to a year or two ago, when we were more keen on going to Scandinavia? These days we might think twice. So what's playing again with this situation, that is opportunity vis-a-vis all these geopolitical risks that they are there to stay, as it seems to me? And B, what is the proportion of the cross-border investment vis-a-vis the overall investment in these markets? Because it seems to me again that it's more of a domestic play by and large compared to substantial cross-border element on the real estate investment. Thank you.
I actually think the fact that markets which have a very high percentage of domestic investment, it's a very good sign as an international investor. There is a liquid market for you to constantly sell into if you need to. I think it's quite important in terms of the stability. Spain, I think there are interesting opportunities in Spain, but I've never seen a market move so fast from uninvestable to very expensive. So, this is the market that for me I see as being very scarily priced. You'll know it better than me, I'm sure. But so I think in terms of the volatility, what you've seen is that the Scandinavian markets have been less volatile in that price movement and the rapidity of the price movement than some of the other political, sort of more peripheral countries, which were out of favour and have now become in favour. And suddenly you've had 200 basis points movement in 9 months.
Well, I think political risks in the Nordics are, I think only with Russia, or with the Russian problem mainly, and this is directly transmitted, I think, in the tourism sector, for example, because the ruble is low and there are less tourists investing now and going on to Finland, for example. But if we look at the fundamental data in the Nordics, in terms of unemployment, in terms of GDP, in terms of exports, and also on credit ratings. We have 4 AAA countries. First. Secondly, we have the lowest unemployment rates in a European comparison. And third, we have a positive contagion between the countries, and especially coming from Norway into the rest of the Nordics. And in comparison to Italy, to Spain, I think that the expectations in growth in Spain are higher than the current fundamental information, that investors are really willing to believe that the economy has restored and it is wealthy at the moment. And we have an unemployment rate in Spain higher than 25%, and for young people higher than 50%. And in the case of Sweden, we have an unemployment rate of young people below 20%, which is, I think, quite important. And you mentioned also that investments in research and investment in innovations are driving the development in the Nordics. And I agree with this assumption because, as you mentioned, all the companies are actually generating economic production in the Nordics are due to innovations. And also the cities with universities are important. And this is not the picture, I think, in southern countries where we have a more industry-driven economy than a innovative-driven economy. So this would be, I think, in my opinion, a driving factor for in favor to investments in the Nordics.
And I think that your slide was interesting, which is you've got 4 countries only that meet the Maastricht definition of how you should manage
and they should
your
not
economy.
do it. Yeah.
You know, and they're there. But the other thing is, I mean, there's a risk obviously around currency, because there's a little, over the last 12 months there's been quite a lot of volatility, although I think over a longer period it's not that volatile, it's a fairly defined band. But I think that there are a number of investors who are quite attracted by the fact that here you've got, with the exception of Finland, countries that are within the European Union but have control over their own currency. And I think that's quite an interesting sort of factor as well.